Good morning, guys. How are we all doing? So Dan from Trading with Dan here. Thought we'd have a bit of Bitcoin in style, Bitcoin inspired change of scenery here. So we've got some got some red lighting to go with the red candles on the chart. But yeah, if you guys wouldn't mind smashing that like button, and we will go straight over to said charts and see what is transpiring. So yeah, as you can see, we dropped out of that, basically dropped out of the channel, lost the horizontal, and that pretty much was the trigger for this pretty huge initial move down. That was obviously brought back up by this first support zone, but that was off. Well, it was clearly short-lived, and then we broke back down, and we've come back and tested this the second actual area of interest for us, and we have then wicked back up from there. So I mean, all we've got to really say is this is a pretty ferocious move in the context of the previous price action. So do we think it's just going to stop here dead, turn on a sixpence or turn on a dime and go straight back up? It is not likely. Best case scenario is sideways, and then try and regain this, regain, I would say, get back above 17,800 if we can and this is quite far away from price. I mean, we're currently sat at 17, just about 17,000 on the nose. But yeah, if we can get back over 17,800, then yeah, we can look to performing, basically trading sideways in this range. Yeah, you guys, I have been saying that this would be the most bullish, optimistic, aggressive range for Bitcoin to consolidate in, and not what I believe was the most likely option. You guys will clearly remember me talking about this 14k to 18k range being the range that Bitcoin is most likely, in my opinion, to trade sideways in and consolidate. Obviously we did have had a foray up in here, and we may still get back into here. Like I said, I may be wrong about this range. This may be the range. Bitcoin may be more bullish than in basically the immediate term than what I give it credit for, and it may have the strength to consolidate in this zone, which would be great, which would be incredibly bullish. Yeah, that would be good, but I don't see it that as the most likely scenario. But again, it doesn't really matter what I see. Like I said, if we trade back above, if we close 4-hour candles above 17,800, then yeah, I think we will just trade sideways in this range for a bit, and then decide, are we going to break to the top side, or are we going to only realistically consolidate just above that level and then break it and come back down again. We'll have to assess that. Or are we going to, well, here is the middle of this range. I mean, quite clearly the middle of about 14 to 18 is about 16. Yeah, around 16 is a level that, yeah, I mean, we could definitely just see us trade in the top half of this range. So basically between about 16 and about, I mean, I'm rounding these figures up. It clearly is about 17 and a half and 15 and a half. But for, yeah, I would 17 and a half and 50 and 17 and a half and 15 and a half. We could easily trade in that range, which is the top half of this wider range that we're looking at here. But yeah, interesting times. I mean, the thing is, guys, if you just watch any markets, I mean, basically you go up. I mean, there's a reason why this is a saying. You go up the staircase, or you go up the escalator, and then you come down the elevator or come down the lift shaft. It's just how markets will work. They will drift upwards in a more orderly fashion, and then when they come down, when the selling comes in, it tends to be a lot more sharp. So whilst this may be shocking to see such a price move after this, then that's just how markets move. It's just how they move. What I will say is that, just to talk on another concept that I do talk about. Just let me just check the sound. Another concept. That is the concept of low volatility usually leads to a rising market, a rising price, and high volatility leads to a lower price. So when you get this price action that is a lower volatility, that will tend to lead to a price rising, because, I mean, very simply, because if the price isn't crazy volatile, then people are more happy to put put capital in it, and that capital in it then drives it up. So then obviously when people remove that capital, and then the price starts coming down, and then that is like a chain reaction. Then the volatility increases. Then people don't want to have capital in just based purely on the volatility of the asset, not even necessarily the direction of it, even though obviously the direction would usually be down. That capital then gets removed, and then obviously volatility increases, and then price comes down. It's like a chicken and the egg. Did the volatility increase first, and then people remove their capital? Did people remove their capital, which then increased the volatility, which then made more people remove their capital? But yeah, that's just to sort of explain the concept, and that ties into why up the elevator, down the up the escalator, down the elevator is a saying, or however you do it, up the staircase and down the lift shaft. I mean, you guys get the point. But it's how markets move. It's how markets move. So the other point though is that obviously this move has quite a lot of momentum. So when you get a high momentum, high volume move, it tends to need to follow through. I mean, we do know in Bitcoin we can get these moves down, and then they don't really continue. We get those classic Bart Simpson moves. I mean, look, we quite obviously had like a big move down here. If we look at the just this one, for example, this was an 20, basically we call this a 20% move down. Yeah, bought back up. And then yeah, we'd sort of consolidated in that range, eventually broke up again. So in this context of this move up from down here, and then obviously getting towards this top zone and having a 20% move down, and then just trading sideways within that, encapsulated pretty much within that 20% range, would you guys not think it would be extremely normal to see after this move up, Bitcoin to be, well, encapsulated in this 20% range here, which would be pretty much the top side of the more aggressive consolidation zone, which I believe is very bullish for Bitcoin. And yeah, I mean, just to see price action trace sideways in here, it would look fine. It would look exactly like what happened here. Obviously, the volatility initially would be higher, and then obviously the volatility then does come down. The volatility comes down, and then we break to the upside. I mean, if you try and tell me that that is not a plausible scenario for us now to enter, then I would not believe you, because it is a plausible scenario. Obviously, we can just wick straight back up pretty quickly and then blast through. Obviously, we could do that. Is that a likely scenario? Is that a more likely scenario purely based on how price action moves? It is not a likely scenario. The likely scenario is we have this high range move wherever it bottoms out at. This would be a nice place for it to bottom out at. I mean, the 16k area could have been slightly front ran, and then yeah, we could basically aim to move about halfway up the height of the range. I mean, we talk about this concept as well, halfway up basically the range of the move down, which would be around here, and that would be a nice either like retake that point, and then we can get 100% retrace and then trade in this area, or we get rejected from there and then we just trade in this lower area for a little bit. I mean, whilst obviously some people I know will be panicking with this move, and altcoins are getting absolutely hammered as well. Like literally, I'm looking at charts of some altcoins and we've got 26, 25, 23, 11, 23, 14, 14, 22, 34, 20, 21, 23, 19, 20, 16, 7, 24, 21, 8% down, and Ethereum itself 16% down. Bitcoin itself 12.5% down. So obviously altcoins are getting absolutely smashed. So I guess this move down is going to be exacerbated if you are obviously heavily in those altcoins, which I have a considerably less amount of exposure to those now. I do, however, have a massive exposure to ETH instead, and that is down as well, but fortunately it is only down about 50% of the amount that a lot of the other altcoins that I was in were down. So anyway, yeah, that's slightly irrelevant, updating you guys on that. But let's have a look at the DXY, because wait for it guys. There we have it, the first time we've seen it on an actual video. We have a 91 handle, and like I said, this is pretty amazing to see. Here, guys. Yeah, pretty amazing to see in the context of where we were heading, where we headed, and where it looked like we were heading. So to see that fully break down all the way back down to a 91 handle is epic. It was looking dicey. It was looking touch and go at this point, and we were talking about a potential regime shift. Basically, like the macro environment was looking at a potential regime shift towards deflation. A lot of asset prices were getting hit, commodities were getting hit, oil was getting hit, and then we did reverse that. That was just a fake out in that macro trend, and yeah, we come in lower, and it looks like we are coming down, and this is just going to be upward pressure to Bitcoin. At some point, Bitcoin is going to be a BTFD. Where that point is, it may be where we've bit. This may be the low. I mean, when you get vicious moves down, as we all know in Bitcoin, that can often be the low. That is the low. This vicious move up was the high. This vicious move down was the temporary low, I guess. This was temporary low. This obviously the low. This obviously the low. So we have the big run up. The first big pullback is the low. This pull down here, initial levels, is the low. Wherever this does bottom out, it could very much be the low. This pullback from the rise up here, that was the low. So it is as you can see, there's a trend in what I've just been saying, that once this move has played out, which it could have possibly have done at this level, it would look fine for it to bottom out at this level, then that could be the low, and we could potentially not trade lower than that. We could consolidate, trade sideways, and come down to about 14k. That is on the table. That is on the table. I will revisit that just now with my my updated views on that. So obviously 14 to 18k. What is actually 14 to 17.5, but we called it about 18k. It was a range I think we were consolidating in. We did spend a lot of time up here, and we were potentially looking bullish. So it may, in my mind, I'm sort of thinking now, do I call the middle of this range around 15.8? Do I call this middle of the range the new bottom of the range, where I was previously saying 14k, and then do I call this around, we'll just call it around 20k as the top of the range, and is this the larger range we're going to trade sideways in instead of this larger range? So all I'm doing is I'm sort of shifting it up half a range. So this was the full range, these were the two halves, so I've kind of shifted it up half. And is this going to be the new range? If Bitcoin does pretty much bottom out around here, maybe dip to 16 on one final last gasp dip, and then rally back up, well, even just to above 17 I think would confirm that for me. So if we go to 16 back to 17, then I would probably shift my view on the 14 to 18k region as the range that we will stay in, and then shift that to 16 to 20k. So still basically a similar 4k range, but just shifted up a little bit. Obviously we are all Bayesian inference model fans here, so we have to assimilate the new information as it comes in. This was the new information that it came in. Initially, was it just a fake out? No, we bounced off it and stayed above. So this information here, this amount of time we were able to hold and consolidate in this zone, is the new information that has been assimilated into the Bayesian inference model that resides in my brain, and that is telling me that maybe I have to shift up my bias now to the potential level that we can trade sideways in. So yeah, I'm sure that is good to hear, because it does mean there is a diminished, in my view anyway, all opinion, conjecture and speculation, in my view there is a diminished probability on that basis of us getting to around 14k. It is clearly not out of the question. It's just I'm shifting towards maybe, if this 16k area holds, we start to trade back up to well into the 17k, then maybe this is the region. So those maybes have got to happen first, because we're not over in this sell-off. We're not, well, we may be, we may be, but we are not. We are no means certainly over in this sell-off, so we could definitely come lower, and at which case I would then, I mean, if we came below 16k anywhere around here, I would look for this to be the range as I originally thought. But if we were to basically bottom around here or above, or basically above 15.8, and then make our way back to into the 17Ks, I will shift my view to, well, sideways in here until next year. Sideways here until next year, which would then make this opportunity today, if that was the case, this opportunity right now as potentially one of the best days to pile into altcoins. Not financial advice. They've been severely hammered. But if we are going to trade sideways in this range for a prolonged period, then they aren't going to go much lower. But these are ifs. These are ifs. This is not financial advice. These are ifs. If this happens, if this, then that. If this, then likely that, actually. Let's have a look at the Bitcoin dominance, because clearly we know it's going to be getting a pull-up. So, yeah, I mean, we said this is the next level. This is basically the level for it to come and back test and retest. We obviously had a wick above with this savage move down. We're now back below. So, so yeah, this is, I mean, this does look nice. Still looks nice as a reversal in the Bitcoin dominance. A nice big initial move down, a nice big retrace to not only a level that we've then basically got rejected by, but also roughly the midpoint rate, the midpoint of the range. So the midpoint of the move down, we backtested, at present. I mean, we may then turn back up and break it, but at present rejected from it. And if we then come back down, that basically indicates we're going to come all the way back down and then eventually break below. Obviously breaking above that midway point indicates we're going to have 100% retrace and then potentially more to the upside. But yeah, again, look, this concept here, there are some very simple concepts, very simple, I call it concepts, but just patterns that don't really get spoken about when people talk about general chart patterns, because I would just call them even more basic, even more simple patterns, and like such as when you get the whole range of the move, the 50% retrace is always likely on, and then you just got to assess, do we break it and continue to 100%, or do we reject and come back down? Simple concept. The concept of low vol leading to high vol leading to low vol, simple concept. The concept of up the staircase and down the elevator shaft, up, simple concept. These are simple concepts. When people think they like looking at the basics like stochastics, RSI, ascending, descending triangles, they are simple concepts also, but there are a few more very simple concepts that you basically just that you need to be aware of. Because if you just look at how price action moves, it's just basically price action moves in certain ways, and just understanding that by observing enough of it over enough amount of time, these patterns very clearly emerge, and these are even more basic patterns than the basic patterns that people tend to look for. So let's have a look at Ethereum. Ethereum absolutely whacked in USD, but where has it come back to? Our only actual real level below us. We're in this big range. There's nothing above, nothing below. Obviously we're topped on the 4-hour 9. I mean, that's a given. We know that happens. Just kidding. But yeah, we come back to the level. We've wicked below. We're back above it. I mean, this is a good level for us to bounce off for the meantime. Potentially consolidate and turn it around and go back up. But we'll obviously have to see what does happen. But this is good. This whole area is a good level. So Ethereum, Bitcoin pairing. Again, very similarly, come back to our most important level. As you can see, it is thicker. So we've just come back to this level. The thicker level, I mean, nice back test. If we bounce off here, that is great. That would be a full and firm retest of that basically most important level, which is why it's in a thicker white. That we basically would have then back tested and broken up back up from. If that is to happen, would look very good for price action. Yeah, so back over to Bitcoin. I mean, we can look at the stochastics, but come on, we know that what they're going to be pretty much saying. 4-hour did basically turn down at this point here, the 4 a.m. candle, and as you can see, there was obviously that was a good move down. Coincided with obviously the break of that important level that we had drawn in. So 4-hour did give us an indication there. 10-hour turning back down as well. 12-hour, I mean, 12-hour turned back down and has lost this, has basically back in the purple zone, which is the point at which we said then expect a big pullback, which obviously we're getting. Daily turning down and heading back into the purple zone also. 2-day turning down. So I mean, these higher time frames are looking like they could be in for a bullish reset, which does then a bullish reset, which then does indicate potential just sideways, be it within this range here, be it within this wider range, be it within this range here, but just some potential sideways, unless you're of the mind that we are going to have a full-on basically reversal and we're just going to keep coming down, which I'm not of that macro view, but obviously we'll have to see what happens with the ranges if they break. But yeah, those larger time frame stochastics look like they need a bullish reset. We just want to revisit that 5-hour, 5-day TD9, because we did pretty much say these were the ones that basically have been very efficacious. So we had acceleration on the 9, indecision, and then the breakdown. If we look at the weekly, which also was coinciding at the same time, which we obviously said we had to be careful of. Here is the weekly 9, nice pullback on the weekly 9. Are we looking to 1 to 4? 1 to 4 candle, a weekly candle correction, so 1 to 4 weeks potentially. In this zone would be nice, could even come down to this zone, which is still just the zones we're looking at. So all healthy price action, all telegraphed, pretty much telegraphed by the market. 12-hour stochs couldn't really stay where they were. We'd had a move up. We needed a retrace. The TD sequentials on the higher time frames had been telling us, i.e. the 5-day and the weekly had been telling us. We did know we had the one on the bi-weekly and it did play out. TD is one of my favorite and what I believe one of the most important tools. And again, it is showing us the way. It is showing us the way. We had 1, 2, 3, 4, 5, 6, 7 green weekly candles, all up until we reached the 9th, the TD9, and then we have a big red candle. So who would have thunk it? So yeah, that is it, guys. Remember, this is not a financial advice. I'm not a financial advisor. I mean, you guys will know I only look at 4 hour. The lower time frame I look at is 4 hour. So you can kind of see this move is not anything totally ridiculous in this context. If you are trading 15-minute time frames, 1 hour time frames, I mean, it clearly looks absolutely horrendous. It clearly looks more horrendous, but this is why I only really look at these time frames, so I can see the bigger picture, so I don't get caught up in the smaller time frame movements, which then just get absolutely overtaken by the larger time frame movements on occasions such as this. So yeah, that is it, guys. Remember, it's not financial advice. I'm not a financial advisor. Always do your own research, and I will speak to you guys later on today.